Hey Mark, welcome to the channel. So happy to have you here.
Thanks for having me. I'm glad to be here.
Yeah, super excited. We have a lot to talk about. Let's start off first with learning a little bit more about your background. How did you end up becoming an investor?
Oh, it's been a long journey. I never really considered myself an investor. So I'm a full-time firefighter in Honolulu, Hawaii. And I kind of was more just headed down the traditional path, start with a smaller home or a condo. So this was maybe back in 2008, 2009. And you kind of just transition into a single family home maybe later on. So this was maybe about 8 years later. And so was able to keep the condo, rent it out. Never considered myself a landlord. It was just one of those. I'm fortunate enough to be able to hold on to it. I have a home, and I just thought I was done. I thought I was done. I had my pension, my medical, my health benefits, and I was just kind of coasting along. And a lot of things happened in life around 2019, 2020, and a lot of things changed for me. I started looking at life differently and looking at kind of how my situation. I was being very risky, kind of just relying on a pension or one stream of income. And I started evaluating things about, even retirement accounts, how, you have to wait so many years to see some of the benefits. You can't access the money. So I really started looking down this path of like financial freedom, financial literacy. And kind of like I kind of looked at different options, maybe stock, starting a business, real estate, and real estate really spoke to me. And so I kind of went down that path, and then we can kind of dig into it a little bit later. But so maybe an investor, 5 years real estate, but I've had real estate for over 15 years or so.
That's excellent. What does your portfolio look like today?
Yeah, so I still have a single family home in Hawaii. I do have a small single tenant commercial space in Hawaii. That's kind of me and my mom and my brother do own it. But most of my real estate is remote, so it's out of state. It's about 6,000 miles away. Yeah, so it's in Pittsburgh, Pennsylvania. So I have 14 single family homes there, and a lot of people are probably going to wonder like, why are you investing so far away? And Hawaii is a very expensive market. It's hard to get in. A lot of down payment. Entry point. The median single family home is about $1 million. So for me, I really looked at I'm going to live here, but I'm going to invest where the numbers make sense.
Yeah, that makes complete sense, actually going remote. And I would love to dive into that a bit further. But first, I think it's really amazing that although you have a pension, you can kind of just stick with your expectations of being able to have income from that in the future. You instead had like a shift in a mindset, like, you know what, I want to have multiple streams of income so that I'm not relying on just one in case something were to happen. So, how do you at this stage really start to get your knowledge up on real estate? Were there particular books, podcasts, or things that you listen to?
Yeah, so for me, I kind of joke about it quite a bit. I probably didn't read a lot since I graduated. I mean, I graduated college, over 20 years ago. I do have an accounting and finance degree, and I'll be honest, I never used it once I got out of college. I strictly went into kind of like sales and then the fire department, and so yeah, I never was much on reading. And but once I started heading down, or like you touched on how I looked at life, my situation being risky, I started reading books. I started listening to podcasts. I think most of us we do kind of start with bigger pockets. That's kind of the big brand name out there, and we kind of all jump into that. And then you kind of just follow what interests you or what strategies you're looking into or what communities you get involved in. And that's kind of where like Michael Zuber, one rental at a time, that's probably the community that I'm kind of most associated with. And Coach Carson, his message really resonates with me, that kind of small and mighty investor. But just that whole community, Dion, Millennial Mike, Landlord Lumberjack, it's just a community that to me is just everyone is there trying to help one another. Whether you're trying to do short-term rentals, whether you're trying to do BRRRR strategy, whatever you're trying to do, you're going to find someone that's doing it in there, and everyone is just trying to help one another. And I think that's what it is. But to me, it's really whatever you're going to do, make it fun. Whether you're going to do stocks, whether you're going to start a business, make sure you have some enjoyment there.
I completely agree with that. And I love the sense of community. A lot of folks, when they go into real estate, they think if I share anything about a deal, someone's going to steal it from me. But that's not the case. Actually, in real estate, the bigger your network, the better when it comes to other investors, other agents, other wholesalers, because you can share deals. You can end up seeing that they need to sell a property and then be the first to know before it even goes on market, maybe never goes on market. So there's a lot of opportunities there.
Yeah, I love that. So like even like us connecting, right? You might connect with someone who has a deal in Pittsburgh, I would say, right? And you're like, I'm not going to invest there, but I know Mark. He invests in Pittsburgh, and you're going to send it my way. And same thing, I might find someone that's investing in Florida, and I'm not going to invest there, but they have a deal, and I'm going to say, hey, Ariel invests over there. I'm going to send it her way. And that's exactly what you're touching on. This community is great, and maybe I don't know, maybe you have all the capital all the time, but a lot of times I notice no one ever has all the capital to take advantage of every deal that comes across their table, right? And it's a lot of times it might not work for you at this time, but someone in your network can benefit from it. And I think that's super important.
Definitely. So at this stage, you are starting to get more into the community of real estate. You're looking at some bigger pockets, probably blogs too. How do you get the confidence to then say, I'm going to choose a market? And what was your strategy?
Yeah, so I think for me, the biggest thing is having boots in the ground or having a connection to that market. And I think a lot of times people put a lot of obstacles in their way because they want to find that best market. And I think, they're like, I want the best returns, I want the lowest crime rate. And those are all good things to look into, great data to look into. But I think what you're going to realize is that there's a lot of great markets out there, and there's a lot of great markets that people are doing well in. Like we know, like Millennial Mike, right? He's in a market that nobody probably would have ever thought about investing in, Gary, Indiana, right? It's just supposedly what the crime capital of the in like 4 years ago, but it's like there's markets that people are being successful in, and I think it's more about, yes, you want to run the numbers, make sure things work, but at the same time, it's also having boots on the ground or having connections in that market that's going to make you more successful.
Agreed. As a data geek, when I first came into this space, I thought I'm just going to get data across the whole entire United States, have a couple of features that I care about, and then find the best one and the top one I'm going to go with. However, like you said, boots on the ground is really important. And data can get you so far and help with alleviating your risk, but having a trusted agent, maybe family members, is really useful for a particular area. So for you, was it a trusted agent or a family member that was there in Pittsburgh?
So for me, it started with one of my friends who also lives in Hawaii. He was investing in Pittsburgh, and he had some connections there. And honestly, for me, he made a lot of mistakes in the beginning. And he probably doesn't like me saying this, but that was my reason why I felt comfortable jumping in, because he was ahead of me. He made these mistakes that hopefully I'm going to learn from and not make the same mistakes. But as you probably know too, we make our own mistakes. So even though he made mistakes and I learned from those, now I made maybe mistakes that I've made in my journey. So whoever I'm trying to help get started, or other people that do want to start in Pittsburgh, hopefully they're going to be not making those mistakes that we've all made ahead of them. So we're all kind of just leveling up on each other, and we're all growing together, but we're all helping each other, right? Because now the way I look at it too is kind of, I want to be a bigger fish, right? So if people are interested in investing in Pittsburgh, the more people that I can help there, now we have better connections for where, if we're all working with one property manager now, when we make a call, it's kind of, we're a bigger deal, right? If we have about 60 properties, right, all together, this property manager is going to be a little more like, all right, I better address this issue instead of someone that maybe only has one property with them, right? So that's also my mindset, is we're trying to grow something together, and it's also, we're all kind of, we want to be that bigger fish to where we get the better deals or get better service and whatnot. But like you touched on, it's all just learning from each other. And luckily my friend made his mistakes, so I felt comfortable jumping on, and then hopefully whoever I am helping, they're not making the mistakes that I've made also.
Yeah, that's an incredible piece of advice of why you would also want to pool with other investors to share, like you said, property managers. And at times you could even get discounts on costs. So if you're all coming in, across the portfolios, there's 60 properties, maybe that property management fee goes from 12% down to maybe 9%.
Yeah. And even we kind of touched on this on the interview when I did with you. Even you know, as a small investor, a lot of times people are, "Oh, I want to get a discount on my property management and things like that." But when you're first starting, right, you probably don't want to be getting discount rates, right? Because you want these people working for you in a sense where they want to service you because you are paying them a fair amount. But if you're gonna go into it and you only have one property and you're trying to find someone that's gonna do it for 7%, right? You're probably not gonna get the best property manager. But now if we bring a yeah, but if we bring a big group in there and they know that, we pay on time or we take care of maintenance and we bring, we'll probably will all benefit and get, like you're saying, get a lower rate after time. And even like handling maintenance issues, I think is super helpful where we can compare costs, right? Like let's say we get a repair for an HVAC. Now we kind of have numbers that we can all kind of communicate with. Hey, this is the numbers that I got when they did the repair for me. And so as long as it kind of looks similar, but we can kind of have some comparison on how things are going to cost for other people that are in that kind of little community that we're trying to build.
Yeah, you now have this level of transparency that helps everyone. So when you were going for your first investment property in Pittsburgh, you had your friend that had already done some investing. Did you copy the same buy box or did yours change a bit?
Well, so that's another, like I said, he made mistakes and he's kind of pivoted since then too. But so what actually attracted me to Pittsburgh at first was he was showing me like these $40,000 homes, $50,000 homes, and he's like, "Hey, look at this! It's $50,000, and I rent it for $900," and I'm like, "Whoa!" And at first, you're attracted to that. Oh, my payment's going to be this much. I'm going to cash flow this much. But as I started talking to, the other agents, as I started talking to like insurance people, property managers, even his property manager, they're like, yeah, he cash flows well, but I probably wouldn't want to walk around in those neighborhoods at night. So that kind of got me like, I don't know if that's the path that I want to go down. Yeah, he's generating cash flow. And I think a lot of it too is if you're going to do it from a distance, the challenges that he found was he was having a hard time finding tenants or applicants that qualified for the property management's criteria. So, a lot of these neighborhoods, maybe, yeah, they cash flow, but the applicants aren't going to meet some of these requirements. So if you're going to self manage and you're in the area, then it might be a little bit easier to always have it occupied, finding tenants because you have your own maybe criteria or standards that you can kind of adjust. But when you're working with a property management company, they kind of have their standards that they're going to stick with. So if you have these properties where a lot of people are applying, but they're not meeting the qualifications, your properties are going to sit vacant longer and whatnot. So that was the issue that he was having was finding tenants. So I looked at it and okay, I'm gonna go a little bit more like C class, B class properties, a little higher price point. Yeah, the cash flow might not be as high, but I'm gonna probably have more stable tenants, better quality tenants. So I probably went with a little bit of higher price point. So my buy box was a little bit different, a little bit better neighborhoods. And so he's kind of pivoted since then. But yeah, like I said, you kind of just learn off of people ahead of you. And not saying it, some people can make it work doing that, but I think if you're going to be living there, it's going to be a lot easier. But for myself, yeah, like you said, you form a buy box, and even for me, there's a lot of things that I would change from that buy box that I had originally, and there's a lot of things that I didn't take into account. Like honestly, I didn't pay attention too much to like parking. I didn't. I just was like, oh, this is a nice property. It looks nice. 3 bedrooms, the square footage, and I didn't realize that even some of my properties now, they're solid base hits, but I think I'm gonna have high turnover rate because like even some of the people I've talked with, it's like, oh, that street, you literally have to reverse out of it. Like there's no place to turn around, right? So those are things that anyone trying to start now, those are the things I try to reinforce to them. Hey, these are other things that you really want to pay attention to, and I kind of overlooked them, and those are some of the mistakes that I've made in my buy box formation.
Yeah, those are great takeaways. And it's also really dependent on the area. So some areas, parking may not be a big deal, and others it is. So really understanding that locality where you're trying to invest becomes very important. And also having an agent that's maybe an investor friendly agent where they've done investing in the past or have like a feel for maybe showing tenants different properties could also help. So did you have an investor friendly agent or who did you end up going with?
Yeah, so I have a the agent I used is a great agent, but at the same time, I don't know how the saying goes. I wish he would have not 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 told me the truth is the right way to put it, but he told me what I wanted to hear a lot of times. So, the properties, like I said, they're all solid, they're all good base hit properties, but there's those little intricacies of each property that maybe if he told or informed me about it, it would have swayed my decision a little bit more. So like the properties are fine. Like I said, they're all cash flowing, cash flow positive. It's just those little things where they could become issues down the road, like like the street or the parking, and even one, it has like a hillside with what could be considered a yard, or maybe it's not a yard because it's on the hillside. So who is responsible for it? Is it me or the tenant? So there's just little things like that where, like I said, the agent, he's awesome. He works super hard. He hustles, but at the same time, I wish he was a little bit more like, hey, this might be a downside of this property instead of just what's the upside for these properties. And maybe I wasn't more straightforward about what I was trying to do, right? So he was just looking at it from, yeah, you're going to cash flow, so it's a good property. So I have pivoted slightly to some other people that I have connected with in the area who I think have more of a vision on what I'm looking at as like a long-term play. And same thing, but like you're saying, yes, investor friendly, but I also feel like they're doing the whole property management thing too. So it's kind of a all-in-one company that I'm working with now. So everything's kind of under one roof. So to me, it's kind of simplified. But I think, like even Zuber talked about too, right? Like we all make mistakes in the beginning of our journey, right? I think he had to go through 4 or 5 property managers that fit what he was trying to do. And same thing, I think it's really just not being afraid to change. Like like I said, this agent, he's awesome. Like I don't have any problems working with him, but I would be more like telling him now, this is what I want, or this is what you need to tell me about the property a little bit, instead of just hearing the good things about the property. And I think that's the one thing is don't be afraid to pivot or change what you're doing.
Yeah, I think that's really important to always assess like the strategy that you're taking, who's in your network, and think like how can I do this better for the next time around? So for someone who's just getting started, what are some like questions they can ask to an agent when they're trying to decide who they should go with?
Well, I think the biggest thing is really kind of don't don't get caught up in the hype. Like for me, like I said, he was only telling me the good parts about the property, right? I want to know more. Like you're talking about, it can go street by street. I want him to maybe, like you're saying, a lot of people like to do like Zoom, or not Zoom, but FaceTime and walk the property with the agent. But have him walk it like the parking, right? Have him walk it at 5 o'clock in the afternoon when people are coming home from work, or when people are going to be all looking for properties, right? Not at 10 in the morning when everyone's out to work and it's easy to find parking, right? Or even at nighttime. What is it like at nighttime? Is it safe to walk the neighborhoods? So those type of things. But I think really also finding out if that agent deals with out of state investors, or if you're going to invest from out of state. I think that's the one thing, because a lot of times agents might deal with investors, but there's a little nuances if you're investing out of state. So to me, if you're going to work with an agent and you are going to be investing remotely or out of state, that is really one thing I want to know is, do you have any clients that I can speak with that, that they're investing remotely or out of state, and can I talk to them and kind of pick their brain on what type of service or what type of prop or how their portfolio is doing. But to me, that's where I would start.
I think that's great advice. And I've gone the opposite direction at times where I just see a property and I just click like the agent that's first available on Zillow, which has cost me, some mistakes in the past. So I think the advice of asking those particular questions, asking if they work with long distance investors, who they've worked with that you can maybe speak to, is all really good advice to feel comfortable and start the relationship correctly. So at this stage, Marc, you know your market, you know your buy box. How do you actually close on that first deal?
I always joke about it, and maybe I shouldn't make it sound so easy, but I think, buying the property a lot of times is maybe the easiest part of the real estate journey. It's what comes after, to me, is a lot of the most challenging things. But I think, as far as if you want to focus on just acquiring that property, like you said, you know, don't rush in. Don't feel like you have to rush into anything. I think that's what really causes a lot of people problems. And a lot of times they feel like, oh, I'm under contract. Like, they kind of feel obligated. Like, I have to purchase this property now. No, it's like if something comes up in an inspection report that you're not comfortable with, or if there's something that comes up in financing that you don't want to continue with, then yeah, to stick to your guns. You don't have to go on with this purchase, because you don't want to be, you're going to be stuck with this property after, right? And you don't want to be put in a bad position. So I think that's the one thing people have to get over is, at the end of the day, it is a business, and sometimes you're going to have to say no, and sometimes you are going to change your mind, or something's going to come up that you're not comfortable with. But I think the biggest thing is talk to people that are doing it. Talk to different lenders. Every lender, as much as they're the same, they're also different. And I think that's super important, is talk to different lenders. And I don't know if you want to get into it, but I think what I notice, what stops a lot of people though, it is the whole LLC formation, and should I do an LLC, and should I set up this structure? And I think that's one of the biggest things that really holds people up, is they try to figure out this whole LLC thing.
And when do you suggest that they figure that out, after the property or before?
So myself, I got scared by the boogeyman. I did the whole LLC thing. I did the whole LLC structure. I have the entity in Wyoming for anonymity that holds the LLCs so I did it. And you know, if everything works properly, yes, you can have some benefits, but I think at the end of the day, you just create a lot of headaches for yourself. And when you are first trying to start, it's a lot of extra work that you don't need to be worrying about at that time. So I think, like you're saying, just getting your first property, getting your foot in the door, and learning about all the other things is more helpful. And you can always transition to an LLC later if that's what you want to do. But I think the one thing, but if you are possibly going to head into that route, just remember there is transfer title fees and whatnot. So even like Pittsburgh for Pennsylvania, they have one of the highest transfer title fees in the country. So of all places where I set up all these LLCs, for me just to transfer it out, if I wanted to, it's going to cost me a lot of money. So that's kind of the only reason why I'm still keeping the LLC structure, because at this time it's like not worth it for me to transfer out and pay all these fees. But yeah, don't get caught up in it. I'm not saying not to do it if that's what you want to do. But I think in my experience is that you're just creating a lot more work and headaches for yourself in the beginning.
Yeah, I think that's a good point. So you mentioned stick to your guns in terms of looking at properties. Don't just fall in love with one. Make sure it really fits your buy box. And if you have to back out, you back out. And for your first deal, was there any anticipation of backing out? Or you were like, that was the first property you saw, you were under contract, and it was the one that you closed on?
Yeah, so I unfortunately, at the time when my first deal, I actually I had so because I had property in Hawaii, a lot of appreciation. I had a lot of equity. So the market was this was back in 2020 maybe. So the market was kind of crazy. So my plan was I was gonna buy it all cash and then refinance out, pull out most of the money so that I can start again. So it was kind of stressful in a sense where I, because I'm thinking I'm paying cash basically, right? I'm putting down $150,000 cash for a property and my first out of state deal. So from that standpoint, it was very stressful. But I didn't have to deal with like the financing side of it for my first deal. So in some sense, it took out a little bit of that stress side of trying to get documents and paperwork and things like that. So it took out a little bit of the headache. So it was stressful in a different way, but it is like I said, having other people like sounding boards, I think is super helpful. And that's why you don't want to go in it by yourself. I think you want to be investing in markets that you do have other people that you can talk to and show them pictures or show them inspection reports or things like that. Because honestly, like in Hawaii, we don't have basements. In Pittsburgh and Pennsylvania, it's a common thing. So if I didn't know anybody that was investing in that market, I would have no idea. Well, like this is maybe kind of a normal thing for basements, some moisture and whatnot, or so those are just things where that's why it's super important to have other people in that market or boots in the ground. But then you learn a lot too. So like I said, I bought it all cash and I learned about there's this thing called delayed finance purchasing. So like if you purchase all cash, you can basically start the refinance process, right after you close in a sense. But a lot of lenders, they do have a delayed purchase option. So if the property is purchased cash, you don't have to wait that seasoning of 6 months to start the refinance purchase. So you can kind of start it right after at closing or right before you close, basically. So yeah, so there's a lot of things you're gonna learn. Nobody knows everything. I'm sure Zuber, I'm sure Coach Carson, all these folks, they're still learning, right? So I think that's what it is. It's constantly learning and being around other people that are doing it. Because there's someone that may do short-term rentals, that I want to know about, right? And then you can reach out to that person. Or some I've never done a burr, so there's someone in the community that probably does burr strategy. I'm going to pick their brain or creative finance. So that's why it's good to get in these groups and connect with different people.
Exactly. So you can just have a sounding board, be able to discuss potential issues. And I love what you said about the inspection report, sharing that out with other folks within your network. Every inspection report I've received, I sent it out to at least like 5 people.
Yeah, and it's the scariest thing, right? Your first inspection report you probably get, you're just like, oh my goodness, it's like 40 pages long. What is all these things? Like, I'm not doing it, but then you talk to other people and they're kind of like, oh, that's kind of standard. There's the inspector's kind of just covering himself or themselves, putting this in there, and you're gonna handle it this way, or maybe you can get a credit for this thing that shows up on it, but yeah, that first one, you're kind of your head is spinning. You're like, oh my goodness, what am I doing? Like, how do I back out of this?
Exactly. Even like the smallest things, like the switch isn't working. Now you're like, mind's blown. You're like, oh, is the whole electric off for the whole entire
Yeah.
house? Has there ever been a deal where the inspection report came back with something that for you was a deal breaker and you backed out?
Not on the inspection report. I forget what it came up on. Um, there was I did continue with it. I actually did have to put down more for financing, but it was the only time it ever happened. It was the lender. So I was doing DSCR lending for the majority of the property. So the asset base or service coverage ratio, where they're basing it off of the asset or the property. the and that's another good thing about that type of lending is the lender is almost kind of like your partner, where they're doing research on the property or the location too, because a lot of times it has to meet certain qualifications for them to want to lend on it. So there was a particular property that the lender, I guess it didn't like crime. It kind of, I think it fell high on one of their crime reports. But part of it was, so I spoke to different people. I spoke to like the property manager that was going to manage it, some other people in there, and they're like, it's because there's a bar, I guess, close by, and so maybe that was kind of um, affecting the data, where because there's this bar in the neighborhood, that the data for that. So it was, but they're all were like, no, this is a good property. You're going to rent it for this much. You're going to get it's in a popular neighborhood. So I did continue with it, but to fulfill the lender's requirements, I did have to increase the down payment for them to proceed with the purchase. So, as like you touched on the inspection report, a lot of times there's scary things that pop up in there. Something could come up with the financing, but generally, there's a solution. Generally there's and like you said too, you can always walk away. If the financing doesn't come through or the inspection report, but typically there's some sort of solution, and like you can get more seller credits, right, on something other than inspection report, or you can rework the financing, but usually there is a solution to the problem. And I think same thing, we go back to like your community or your network, and if someone in there probably saw something similar to that, or somebody has gone through that process, or you just bounce ideas off of, like, oh, how would you handle this situation? So I think that's the one thing. And the one thing about, like you said, like you touched on earlier, the real estate community, everyone is really trying to help everyone. And I think everyone enjoys trying to solve the problem. I think, like you're saying, data and numbers is your thing. I think like if someone brought you this deal and said, hey, can you take a look at this for me? What you think? You'd be excited, like, oh yeah, I want to run these numbers and see how it looks. And I think that's what it is. There's so much people in this community that just enjoy, looking at properties, looking at numbers, trying to solve solutions, or how would I figure this out? How would I handle it? Because it might come up for you later on in another deal, right? So I think that's super important. I can go back to that. We keep touching on it, but your community is super important.
Agreed, because your community really helps you expand to have not just yourself, but other problem solvers as well. And that's like a huge skill that sometimes we overlook that a lot of real estate investors have, is being able to solve problems very logically. Like there's usually a solution every single time, and someone has been through the same exact scenario too. So whether that's a phone call that you have to make, or yeah, speaking to someone who's done it, like it's just a lot easier to do it that way versus internalize everything and just freak out. So it's not as scary as some newbies may think.
Totally agree. And I think that's, like I touch on it quite a bit, is, being a first responder. And maybe that is just somewhat in my mindset. A lot of times we go to situations, we go to incidents, and yeah, we train for different situations, we drill for different situations, but it's never how you drilled, right? There's always some kind of wrench thrown in the way, or every situation is different. So you kind of, yeah, you're gonna go off of how you trained, or your knowledge, but at the same time, a lot of times you gotta just figure it out, and you got to figure out the solution. And we always joke about it, but kind of our thing is, we don't want to leave the situation worse than how we arrived, right? So we go to something and we want to mitigate it, and then we'll figure it out after that. And it's a lot like real estate. You're gonna be thrown these problems, or situations that you have to figure out. And the biggest thing is, okay, we just got to make a decision, and now we're gonna move on and figure out a solution. And if it does come up again, now we kind of have a better plan, or hopefully we've improved or we learned from it. But yeah.
Love hearing those parallels of like how you're able to kind of bring your work experience and what skills you've gained there into real estate as well. So segueing to your portfolio now, you have a pretty sizable portfolio. Where do you see it going from here?
Hopefully smaller. No, but I'm definitely, I think, a lot of people when they first get started, they want to go fast, they want to go big, they want to get 100 properties, and they think, this is the way to do it. And I think for myself, and a lot of people I connect with now, I think they realize that the Dion and the Coach Carson mindset of the small and mighty investor, and kind of scaling back at some point, and it's more about the time freedom than anything else. And I think a lot of times that's kind of where my mindset has shifted to, where I don't know exactly how Dion puts it. Is it the right amount of doors with the most amount of cash flow? I think that's how he puts it. It's kind of, you don't need 100 doors, right? You might just need 4 properties, 10 properties, but if you have the right ones with, and maybe paying it off makes the most sense for you. Some people are totally against paying off their mortgage, but sometimes you just want that free and clear property, and reduce a lot of headaches, and now you've generated more cash flow, and that's really what a lot of people are looking for. So I definitely, I do want to go a little bit further, and then kind of like Coach Carson talks about, is prune the trees. Maybe get to 20 properties, 20 doors, and then now let's evaluate which ones are the better performing ones. Because even like you touched on, right? The numbers on a sheet may look great, like it's supposed to be this well performing, but for whatever reason, maybe this property just doesn't perform as well as the others, or maybe this one has some deferred maintenance on it. So maybe I get to 20, and I'm going to evaluate and see which ones I want to maybe keep and scale back. And now maybe I'll have 5 paid off properties, and maybe 5 or 7 with some mortgages on them, but now I've increased my cash flow. And that's kind of what I'm looking at now. That whole mindset of bigger is better, that's out the window for me now.
Yeah, same here. You have to also assess like what is your target goal, how you can maybe do that with less properties, and how you get rid of headache properties as well. Do you see yourself maybe selling properties and doing like a 1031 exchange into a commercial asset?
Well, I don't know how much time we have, but I have done a 1031. So that condo that I did have in Hawaii, I 1031 out of properties into Pittsburgh, and I would do everything all over. I would do it different again. So I'm glad I did it, but I would do it differently if I was doing it again. I guess in short answer, I guess I did scale up from a condo to single family homes. So in a sense, I did scale up, but I think if I were to do it again, I would go bigger, and I probably would have went into like a smaller multifamily type unit. And I think I touched on this on some other people's podcast, but I think I talked myself out of it. Um, and I think that same thing, that's getting back into, I didn't have as big of a community at the time, so I probably didn't have someone to maybe bounce it off of. But I had opportunities to probably get like 8 unit, 10 units with the 1031 from the equity that was in the Hawaii property. But I think I just talked myself out of it. Like I kind of was like, oh, I'm not ready for this. Like, how am I gonna handle something this size when I'm just getting started? And like we kind of touched on it, you figure it out, right? And I think if I, like I said, if I could go back in time, if I could do it again, that's what I would have done with the 1031.
Excellent. A lot of great tidbits, and I love how you're always able to reflect on your past experience, see in the future how you would maybe change things up. And for those that want to get plugged into your community to maybe bounce a deal off of or a scenario, how would they reach out to you?
Oh, I'm all over the place. So just I go by the financial firefighter. I'm on YouTube, Instagram. I'm pretty active on X now. I am on LinkedIn, Facebook, but yeah, I'm everywhere. Financial firefighter. I'm in, Facebook, your techie real estate group. I'm in the school community for one rental at a time. But yeah, I'm all over. Or just reach out to me and I'll get back to you.
And you do live streams as well, correct?
Yes, I do. I actually have a lot more fun during the live stream. So, I'm really um trying to follow the blueprint that Zuber set up. He's bringing on, he brought on weekly regulars, kind of, some are out of state investors, some are self managing, some are lenders, some are insurance people. So that's kind of what I'm doing. I'm trying to connect with different people that are trying to grow themselves, grow their brand, but at the same time, people that I'm in the communities, like lenders, side hustle, social media, like yourself, trying to see if you want to come on and talk about what you're doing. but just trying to grow a community that people are wanting to come back and learn about financial freedom, learn about real estate, learn about side hustles, but just thinking differently and hopefully having fun. Honestly, I just have a lot of fun doing it, and I think that's the biggest thing. Is there's a lot of joking around. But the lives definitely to me are way more fun because we have such a great community too that they're always throwing in comments in the chat. So and you got to be on your feet. You got to be able to answer these questions they throw in. So a lot of times, like during these interviews, you're a little prepared. You kind of know what you're gonna say, but in the lives, you don't know what to expect, and sometimes you gotta you might regret what you're gonna say sometimes, but you kind of gotta go what comes to your mind at first, right?
Yeah, it's a fun challenge being on that side of it. And yeah, super exciting that you have that access availability to have people ask questions. So definitely check out Mark's channel. Also, for someone who's just getting started, is it worth their time to start a YouTube channel on their own, or would you say that they should hold off until they have a couple of deals?
I think it's better to just start and document your journey. And I see it as it's a better way to also get better at talking and communicating and kind of finding your voice, and finding who you connect with and what people you want to have kind of in your community. Because there's some people that you may not get along with. That's just how life is, right? But I think finding that community that you really relate to. But I think just putting yourself out there, you figure out how you best communicate. Or even like we talked about being on the live. Sometimes people are going to ask questions, and it's like, huh, I never thought of that. Or how am I going to answer this? Or how am I going to? What is my thought about this? So it really gets you thinking and keeping you kind of up to speed on things. And I think it's so easy to get caught up in you seeing the short clips on social media and everyone telling you how they're making this much money or how they bought their most recent 100 unit building with no money down and all these things. But when you get to the lives, I mean, it's just people, real people that don't know what you're going to ask, and you can ask them a question, and they're going to probably tell you what they're thinking at that moment or what they believe. And but it also just keeps you on your toes and it keeps you wanting to learn and be better. So definitely put yourself out there. And it's a good way to document your journey. And once you get to like, I'm sure once you get to like your level, when you're building a product and a brand, you probably get tired of a new person reaching out to you and then you have to explain your story all over again. But when you have it documented, it's so easy to be like, hey, go check out my channel, or here's my bio. And then now when you connect with them, you don't have to go over all those beginning steps of the journey. And now you can kind of get into the weeds on what you guys really want to talk about or what questions they have. But that's what I noticed is a lot of times people reach out to me and it's like, okay, I gotta tell my story again for like the 100th time. But here, go check out this video. Now you have a better idea. So now when we talk, our time is better spent, right? Now we can kind of get into what you want to talk about. And I think that's super important and why it's good to start a channel too.
Yeah, I completely agree. It's never too early. Document your journey. And if you're camera shy, that's okay. You can still do it on a blog as well. Um, yeah, a lot of different methods. But with that, Mark, it's been a pleasure having you on the channel. I have no doubt we'll have another collaboration video in the future. Thank you so much for your time.
Ah, thanks for having me. This was fun.